Hi everyone and welcome back to Money Experiment PH. Today we're going to try buying Bitcoin to explain how buying instruments works in eToro. We chose Bitcoin since we are making this video on a weekend and crypto is currently the only market open. Before we begin, let's briefly discuss how our current investment in eToro is doing. So for the year 2020, we are making a 20.60% profit, and if we look at the chart, it's good to see that the trend is going upwards. To everyone interested in registering in eToro and start investing, we will be providing our referral link down below in the description box. If you are also interested in copying us and willing to risk in investing, you may search us using Money Experiment PH in this field. So just click on that and click the copy button on the right. So as you can see here, you can adjust the amount which you are willing to copy us, say $200. And then you may also choose to set the stop copying, meaning if the value you have chosen above drops below the specified amount in this field, the copy function will automatically be stopped. Let's say we're setting that to $160. So once you've adjusted these fields, just click copy. So let's get started. First, find the instrument that you want to buy. You can choose to go through the trade markets tabs, categories per industry. So in this case, crypto, BTC or Bitcoin, or you may search through this field. Type BTC or Bitcoin and just click on that. After clicking BTC or Bitcoin, you will be directed to the main page of Bitcoin. So just click the trade button and you will see a window pop up which basically shows the options for trading this instrument. On top of this page, you will be able to choose either to buy or sell a specific instrument. Buy position means you will have profit when the price of an instrument goes up and you will make a loss when the price goes down. Vice versa for a sell position. You will have a profit when the price goes down and make a loss when the price goes up. Another option you will find here is a drop-down menu which shows trade versus order. If you choose trade, this means you are buying or selling the instrument at the current market price. And if you choose order, this means you are going to wait until the market price reaches your dictated rate. Another option you will see in this window is amount versus unit. So prior to opening a trade, you can choose to open a trade in amount or in unit. In amount, you are inputting how much amount of money you are putting in an instrument. Whereas for units, you are inputting how many units you are buying for a specific instrument. For example, if the amount you put is $30, meaning $30 of your deposit will be going to Bitcoin. Note, however, that eToro has set a minimum amount for cryptocurrencies. So to show you, if I try to input $20, it will automatically increase the deposit to $25 and notes that the minimum amount of deposit for Bitcoin is $25. So let's try to change it to units. So if you try to put 1 unit, meaning 1 Bitcoin, it will show you the amount that you need in order to open this position. What's good about this is to open a position for Bitcoin, you don't necessarily need to buy round or whole units of a Bitcoin, meaning 1, 2, 3, and so on. Let's say you only have the minimum amount required at $25, which is equivalent to a specific unit of 1 Bitcoin. You should still be able to open the position as well, meaning you are only buying portion of 1 Bitcoin. This applies to all other instruments like stocks or ETFs, although the minimum amount we can buy are different. Next is leverage. Leverage means you are borrowing money from eToro and use that money to buy more. Times 2 means that you are using 1 amount of money to buy 2 amounts of instruments, so you borrowed 1. Times 10 means you are using 1 amount of money to buy 10 amounts of instrument, so you borrowed 9. There are different leverages multiples per instrument and the multiples could go up. Oil, for example, is up to 100 times. Euro USD is up to 400 times. For Bitcoin, there's only 2 leverages, that's times 1 and times 2. For now, eToro has sole discretion to decide the maximum leverage. When the market is extremely volatile, they sometimes limit the maximum leverage. I just would like to add a warning here. If you're a beginner, please try with a low leverage first. Higher leverage without enough knowledge and experience will make your trade into a gambling with low probability of winning. It can also blow up your account very easily if that is the only and entire balance you have in your account. Let's now go to stop loss and take profit. The idea of both options is similar where the position is closed when the current market price meets the value that you have indicated in the field. In stop loss, you set a specific amount up to which you are not willing to take further losses for that specific instrument. And vice versa for take profit, where you set the amount to which you are ready to take the profit from that instrument. In setting the parameters for these options, you may choose between amount or rate. With amount, you are setting the value of loss or profit you are taking. With rate, you are setting the rate of the instrument when it goes up or down. Specifically to stop loss, there is an option to tick the box trailing stop loss. If you hover in the small letter I, you will see a description of what this option does. In layman's term, a trailing stop loss will help you protect your profit in an instrument at a certain price point. Let's say the value of Bitcoin increases. Coming from the term trailing stop loss, the stop loss price point will trail the current increased price. And if the Bitcoin price goes down, the stop loss price will maintain its higher price. This option basically helps you to limit your losses. So let's try to discuss this concept further using situations. In the first situation, a normal stop loss, let's say you buy a stock at $100 and set the stop loss at $80. If the stock price increases to $200 and then falls back to $80, then your stock will be sold at $80, so your final loss from the initial investment of $100 is negative 20. With the trailing stop loss, let's say you buy a stock at $100 and set the trailing stop loss at negative $20. If the price moves up to $200 and it falls down back to $80, the price movement from the first situation is basically the same, but in the first scenario, the stock would have been sold at $80. But here in the second situation, the stock will be sold at $180 since the price has gone up to $200 and you have set the trailing stop loss to negative $20. Let's talk about overnight fee. An overnight fee, also called a rollover fee, is a payment that applies if you hold the position overnight. CFD positions that stay open overnight incur a small fee which is reflected here at the bottom relative to the value of the position. This is basically an interest payment to cover the cost of the leverage that you use overnight. So as you can see, if you set the leverage to ×1, the overnight fee reflected is 0. But if you set it to ×2, the value changes, depending on the parameter set in the amount. The fees vary according to the position's direction, buy or sell. In some instances, you can get the money back an overnight refund. So once you have set the parameters for all the options above, you are now finally ready to open your position. And click Open Trade at the bottom of the window. And that's it. Thank you for watching this video. If you have any other questions about eToro or suggestions on what videos to make on this topic, just drop a comment down below. If you like this video, hit like and subscribe. Bye!